Cyprus, the country now seen as the eurozone's next big worry, has a new president, Nicos Anastasiades. His new presidency brings with it tough challenges. Cyprus is teetering on brink of bankruptcy, trapped in recession, with 50,000 people out of work and a bailout yet to be approved. Joining me on the line is Fiona Mullen, Director of Sapienta Economics. Hello, Fiona. Ratings agency Standard & Poor's says Cyprus faces a material and rising risk of defaulting on its sovereign debt, especially if international lenders do not approve a vital bailout package. Do you think this is likely to happen?
I think there is still a risk, but I think it's a lot less than it was before the election this last Sunday. It's clear that EU leaders think more highly of the new president, Mr. Anastasiades, than they did of his predecessor. And I think you can see that reflected in the bond prices, which rose yesterday. But certainly if Cyprus doesn't get bailout funds by June the 3rd, when it has a 1.4 billion Eurobond redemption, then it certainly will default. So the time is pretty tight. He hasn't got much time.
Ireland Finance Minister Michael Noonan said his concerns about the EU would remain until the problems facing Cyprus are resolved. He is worried about how bank depositors will be treated if the €17 billion package is approved. Do you think his concerns are justified?
I think that, yes, this comes from the concern that people are saying, well, the only way to make Cyprus's debt sustainable is to somehow involve the depositors, because Cyprus has a large bank deposit base. The banks don't have much external debt, so you can't target that. The sovereign bonds are under English law, so that's quite tricky. So the suggestion is that this is the only way. I think I've just been rerunning the numbers the last few days, and we now have, I don't think it's necessary, because we've now got a lower bank recapitalisation figure from PIMCO, which is now 8.9 billion instead of 10, and in a small economy that matters quite a lot. The budget deficit was cut last year. They had a primary deficit of only just over 200 million. So I think they're going to make it to 120% of GDP just with privatisation. And although before the election Anastasiades was a bit circumspect about what he would do, I think he's definitely going to go for privatisation. He knows he doesn't really have a choice. So the bank depositor bail-in isn't necessary anyway. But I agree with Noonan. It would be very damaging if that were considered an option for. I mean, it wouldn't. You do it once in Cyprus, and then they would do it in Ireland. Ireland's also got a big deposit base. Maybe even Italy. Who knows where it would stop. People would start saying, is my money safe in the eurozone?
Nicos Anastasiades, the Conservative leader in Cyprus, has won a presidential election runoff. Critics say he will face a tough battle convincing reluctant countries, especially Germany, that Cyprus deserves help after its banks lost billions of euros on bad Greek debt. How hard will it be to convince opposing countries Cyprus deserves a bailout?
I think he's going to have to make some significant moves on money laundering. There's clearly a perception out there that there's a problem in Cyprus, even though their legislative compliance record is quite good. They have a lot of laws in place. Some of them they have more laws in place against this than Germany, for example. But there's clearly a perception, and perceptions matter when it comes to politics, that Cyprus has a problem. So I think he may well have to accept this idea of a private firm coming to do an audit of the international business services here. And he may, there are still plenty of other institutional changes that can be made. They need more people in the anti-money laundering unit. They need tougher sanctions against lawyers and accountants. They're still self-regulated, and so on. Some whistleblowing protection, I think, would also be useful.
And if and when are we likely to see a bailout for Cyprus materialise?
Well, I think the German and French foreign ministers were saying they wanted it by the end of March. My little antennae say that suggests perhaps they're a bit worried it might go into April. But certainly we need a deal in time for it to get through all of the parliaments that have to ratify it. So really, I guess the latest possible is early April, and then it starts to get a little bit tough. Early to mid-April is the deadline, after which it starts to get difficult to get the money in time. But having said that, Anastasiades has announced that he's already been in contact with third countries about a bridging loan, so that if the bailout isn't agreed before the end of March, then it sounds like he may be getting a little bit of money to tide him over for this June bond payment. So I think either way, it looks like he's got a plan B if it doesn't work.
What many Cypriots find most frustrating is that their crisis, like those in Ireland and Iceland before them, was concentrated in the banks. A bailout will surely bring harsh austerity and recession. Is a bailout the answer to Cyprus's financial turmoil?
Well, I think the alternative is let the banks go bust, and then do you do it the pure capitalist way and let them go bust, and then it seems that the eurozone doesn't want that in its the eurozone leaders seem to have taken the decision that they're not going to let banks fail. So that's really the only alternative. I mean, they tried to, the previous government tried to get money from other sources, and the number was just too big for them to be able to get it. But for sure, it's the banks. You can already see lending has slowed right down from the banks. So I think that things are going to be tough for a while yet.
Thanks for joining me, Fiona. That's all for now, but stay tuned to Dukascopy TV for the latest financial news and updates. For now, though, goodbye.